Hello and welcome to Weekend Investing Daily Bytes, episode 341, 27th of January, end of the week. And it was a day of Adani mayhem in the market. The report that a third party came out with insinuating uh, fraudulent practices at this group uh, day before yesterday. Day before yesterday, somehow the market took the report with some pinch of salt. And Adani Enterprise, I think, was down 2 or 3% only. Some other stocks were down slightly more. But global investors seem to have jumped in over the last 2 days. Investors like Bill Ackman and several others who have no position as such, but backed the report company. That caused a lot of other investors to essentially throw in the towel. Stocks in the entire Adani complex were beaten black and blue. Uh, we'll first take a look at the index. So Nifty itself, after hitting 18,200 just 3 days, 3 sessions back, has collapsed from 18,200 to 17,500 intraday today. A fall of nearly 700 points in 3 sessions, and then recovering only 100 points at the end of it all. So, this range that we have been talking about for the last many days is 17,770, 17,800 range. That did not hold, and we have broken down from it. If this were to be some sort of a flag pattern on the reverse side, then we probably could go, somewhere near these supports. And we've had several gaps on the way up. Several of them got filled, but there are many others that still exist. The 200 DMA also is at 17,300. So an optimistic view would be that somewhere around here we may find support. Pessimistic view would be that we will go and retest 16,750, this October bottom or September bottom once again. So while we were holding in this range, there was still um, a chance that in the short term we may break out and again retest the highs, but that is now gone. The budget and the Fed outcome on February 1st will, of course, give new direction if it will. But first, we have to resolve this Adani issue in the market for all non Adani stakes shares also to perform. So, while Adani stocks were beaten black and blue, others were also not spared because at the end of the day, I mean, if it's a systemic risk to the entire market, then the banks are involved. And just look at where banks were. PSU banking sector was down 5.5%. I mean, that's a huge cut on the PSU banks. Energy stocks up, down 5%. Metals down 4.6%. Commodities down 2.7%. So all sectors uh, cracking hard. Only CNX Auto, CNX FMCG, and CNX Pharma holding the line there. And CNX IT also down only 0.9%. So with Nifty down 1.6%, uh, essentially three or four sectors were really beaten black and blue. And banking, because the public perception is that this group has humongous uh, exposure to banks, whereas my sources tell me that they have only 0.7% exposure to PSU banks and 0.3% exposure to private banks. And a lot of their exposure is to global banks. So even if one were to think of the eventuality of, they're going towards more stressed situations for this group, I don't think that is a very big deal for the local PSU or private banks. All indices beaten badly today. Small caps down 2%, mid and small cap 1.5%. But Nifty next 50 was down nearly 4.5 or 5% during the day, minus 3.72% at close, and that has caused a bloodbath in MI 10 at minus 9.5% because this is exposed to some Adani stocks. Nifty Next 50 as an index itself, is extremely volatile with stocks like Zomato, Paytm, Nika, all those kind of names also being there along with Adani stocks. So high volatile, high beta stocks being there. All other momentum strategies at weekend investing also suffered. ATH a bit less at minus 0.97. MI 30, MI 25 all down 3 to 4%, but NNF 10 of course blood like anything. Today's heat map: HDFC Bank down 2%, ICICI Bank 4.5%, State Bank of India. Just imagine State Bank of India losing 5% in a session. State Bank of India is like 5 lakh crores worth of market cap, I think. So 25,000 crores just gone one day from here. Uh, Reliance down 2%, ONGC down 3%, Infosys TCS 1.5%. Adani Enterprise, of course, 18.5. Adani Port 16%. ITC standing very, very strong, plus 2%. Tata Motors, Bajaj Auto, almost plus 6% each. Uh, Coal India, BPCL, IndusInd Bank, other prominent losers, Axis Bank, Kotak Bank. So nothing was spared as such on the heavyweights. Adani stocks, entire group was beaten till they could be beaten no more. Many stocks were on down circuit. Even the associated stocks now, the where Adani has taken a stake, was beaten. NDTV down 5%, maximum it could go. Adani Wilmar 5%, maximum it could go. Adani Power maximum 5%. Adani Enterprise was down nearly 23 or 24% at close, minus 18%. Adani Total Glass to maximum at minus 20%. Adani Transmission, Adani Green also 20% each. Adani Ports minus 16%. Ambuja Cement at one point was down, I think 23-24%. Recovered a bit at 380 at minus 17%. So it's a huge, I think 12 to 15 billion dollars worth of market cap gone in Adani, and it's not yet stopped. So we don't know where it will really stop. This is the what I was talking about in terms of Nifty Next 50 index. The index itself has dramatically dropped from 42,000 to nearly 39,000. So a drop of almost 7-8% within the last two sessions, and we have retracted back to June 21. So 1.5 years of going nowhere on this index, uh, and this entire rally that we had from June 22 to October 22 almost is nullified with supports maybe coming in much lower here. So this is like a falling knife right now, having crossed the 200 DMA on the previous day. Longer term picture: the Nifty Next 50 has taken support many times at the 200 week moving average, although it did break through in crisis times below it twice, for once in great financial crisis and another in the COVID times. So I would think that the 200 DMA nearly would be around 35,000 if we do continue to bleed, and another 10% may be there in terms of coming to some fair point where some more supports may be there. It may have some supports earlier if we are able to have some good news from the budget or from the Fed. But this fear that Adani group stocks will hammer the banking sector, that needs to be sort of resolved in the next one or two sessions. And of course, a lot of margin calls and people having positions in various stocks were getting sold left, right, and center. So the system itself, was tested on with sort of brutal force but has withstood that uh, situation. So basically, discretionary investing challenges when you're doing non-discretionary investing, like we do in weekend investing. There will be times where you feel like that some discretionary steps should be taken. Maybe because we are feeling that some stocks may go further down, or but we never know what will happen actually. So sometimes we feel like we want to preempt the system or deviate from it, take a call, take a special call. But over a longer period, if you start to you know preempt a non-discretionary system, then it will hamper the long-term path of your own investing. So, like if I remember last time Adani stocks were falling, several other managers took a discretionary some other, several other non-discretionary managers took a discretionary call that okay, we'll get out midweek or things of that kind. So my own sense is that there is no point of trying to beat the system. Yes, sometimes the system will beat you badly, uh, and that is part of the accepted game that we are entering into. So high volatility strategies, high risk strategies will need to be segregated from lower risk strategies, lower beta strategies, and allocation should be done accordingly. So core strategies uh, essentially could have more allocations, and then satellite strategies, which are more you know high beta or high volatility, could have satellite or spoke model where you could have lesser allocation or strategic allocation. Also, as I always mention, always please consult your financial advisor. How much exposure to equity overall you should have. You must have asset allocation towards gold, and I can tell you with good confidence over the last 25 years that whenever there is crisis, your allocation to gold will help you. And people who have had exposure to gold in this current year and a half also have done extremely well versus others because the gold component has been helping them. So this is all I had for this Friday's a bit disappointing market. But if you see the longer picture, India's growth. Let me also show you that if I can. One second. I had a GDP chart here that I wanted to show. So this is. Let me just zoom in. So we are here at 2022 and 3.46 trillion dollars of GDP, and what you can see is that the projected path is really, really very, I wouldn't say very optimistic, but the the bounce from COVID going from 2.8 to 2.6 trillion and then bouncing to 3.1 and now at 3.46 is an extremely good trajectory. If we can grow 10 to 12% nominal GDP growth over the next 4 5 6 years, we are certainly on the path of 5 trillion here by 2027. So with that backdrop, if you come back to your let's go back to, let's say, the Nifty chart. Let me just open the Nifty chart for you. So if we see the Nifty chart, I mean, we were chugging along here in this trajectory. pre-COVID, and pre-COVID we were 12,200, 300 at fair valuation. I mean, pre-COVID we were not very expensive actually. Now, from pre-COVID, if you were to calculate 10 to 12% GDP, nominal GDP growth over the next 4 5 years, you will come very close to 18 19,000. You can do it. You can do the math. 12,500 at 10 to 12% every year cumulative growth. It'll come to very near 18,500, and we are already 3 years past from there. So we are not too far from where the fair valuation would be versus the historical trend. But of course, special situations will obviously uh, won't deal with the valuation part. But just to give you a sense that while it may look that market went to 8,000 and now at 18,000, and hence we may do some sort of drop to 10,000, that is extremely unlikely, because the longer term trend is pointing towards a region of 15 16,000 at worst. So from that perspective, I mean, there's not a whole lot that it can really go down to. And this year and a half of consolidation is, it takes away the excesses and the froth that is there in the market. I mean, the fraud doesn't stick around for that long. Uh, this consolidation that has been happening since October 21, it removes the froth. I mean, those who you know are sitting in leverage positions, so on and so forth, they cannot sit for so long on this. So we've had some cooling off, we've had some time correction also, and of course now we will again be looking for some bottom somewhere in this range. Maybe there is some confidence that comes back in the market post the budget or next week. Let's hope for the best. And with that, I come to a end to this daily bite. Do send us your comments about the daily bite series, about any topic that you may have liked or not liked. And also, please do keep sharing these videos with your friends and family. And thank you so much. Bye.